Hello guys, this is Daniel. I wanted to go over pretty much an indicator that I think I don't see it being talked about too much. That is called the slope and deviation. Slope and deviation. Let me give you an example. For example, what I've been keeping track of is that I always go to the 5 minute. I always go to the 5 minute chart. I go to here. I look at the regression. And then as you can see, if you look at this little blue box right here, there's a number that says 20.84. That's pretty much your slope. That's how much yeah, like a slope. How much is it? Is it spiking up? Is it spiking down? As you can see in this example, it's 20.84, and then all the way at the bottom, you see 9.68 for deviation. Pretty much deviation is just how much is it swinging up and down. Sometimes it's say the slope, it could be pointing up, right? But the deviation is pretty close to the line. Sometimes the deviation is really high. That means that it makes bigger swings. Even though your slope is the same, the swings become much wider, up and down, up and down. So I've been keeping track of these right now, and I've ran into some very interesting stuff. So once again, this one, for example, it's a 20.84 slope, 9.68% deviation. Now, once I've collected many of these, like for example, this one is for all of 2023. So I collected the slope and the deviation right here. Okay. This column right here is the spike. Pretty much what I did is that anything that has spiked up over 72%, I highlighted it green. Anything from 50 to 70 is highlighted in blue. So you can see pretty much the intensity in which they spike. Once again, what I categorize as a spike is how much does it go up from open. In this case, if this is the opening right here, it spiked up 9.55%. So that is what I record as the spike. Okay. After collecting slopes and deviations, if you sort, this is all of 2023 data. Once you sort it, in this case by slope, you're going to see that the ones that have a higher slope, to no surprise, again, to no surprise, the ones that have a higher slope in this case is anything over 100, which in all of 2023, there was only 38 cases of stocks that had a very steep slope. That means, most are sloping like this one, for example, like this, but the ones that are going over 100, the slope is higher like this. Now you won't see it because you would have to be able to somehow read many numbers, not just the numbers but also the weight by the volume, which is it's very difficult to do. But here, if you have the data in Excel, you can see that it spikes a lot. Anything that has a slope over 100. Also, I think I saw a good group over 50. Anything over 50, as you can see, 50% slope. Anything that has a slope over 50 also tends to spike at least 50% or more. So if you're going long, if you decide that you want to go long, I mean, this will significantly increase your odds of being profitable if you aim at anything with a slope higher than 100. You could use this indicator plus other indicators and then a little bit of technical analysis. You're going to be able to have a much better shot of being successful if you're going long. Also, if you're going short like myself, you could start getting the average of how much do these actually spike. Is it 30%? Is it 40? Is it 50? Or is it more than that? And then, as to no surprise, right here, I'm following the slope right now. The more the less in this, the less slope, the less you see it spike. You know, now it hardly reaches 50%, and it hardly reaches 70. To no surprise again, 20s. The slope is less and less. Look at this. It's almost empty. They almost don't reach. They almost don't reach 50 that much. 16s, 15s, 14s. These are very slow, very smaller slopes. It's not that steep anymore. The slope is not that steep. Anything less than 10, as you can see, it hardly reaches anything over 50. 7% slope, 5% slope, 5% slope. Look, almost nothing reaches over 50. You know, so I mean, this is incredible. 4% slope, 3. If you're going long, you know pretty much which ones to avoid. I would avoid, if I'm going long, I would avoid anything that has like a small slope, almost pretty much anything like less than 10. 3% slope. I mean, it is possible, of course, as you can see here, it is possible to reach at least a 50% spike, 50%, 70% spike. It is certainly possible, but it hardly reaches, you know, anything like that. Your best bet in this case would be targeting anything that has like over 100%. Look at this. Anything over 100%, as you can see, it reaches 50s, a lot, 50s and 70s. And the same goes with the deviation. The deviation again is pretty much how much does it swing from, say, regardless of, let me remove this line. Regardless of what the slope is, sometimes your price action, it tends to deviate not that much from the actual slope, like this. Sometimes the swings are much bigger, and they swing bigger swings. However, the slope remains the same, but the deviation significantly increases. So, as you can see, you can also sort by the deviation. Actually, I have not checked that up for this year. I have checked it for, let's see. Yeah, see okay, 30s, 20s is this. This is a lot of deviation. To no surprise, it makes bigger swings. You have a better chances of large spikes. Less deviation. Okay, 12s is still okay. 12 is okay. 10s. 7, 6, 5. To no surprise, this is very little deviation. It's barely moving. Look at this. Almost nothing reaches, not even 50, much less 70 or even. Okay, like I said, you will get these, like this one, for example, a 320% spike. It is certainly possible, even with the small deviation. However, probability wise, statistically speaking, there's not a lot of chance. Look at this right here. Deviation, just 2%. There's only one. Most of these never reach, not even 50. There's one, okay, blue, remember, blue is 50. Green, 70. Blue, 50. Yeah, it also, this is great data. I think this is great data. Remember never to just rely on one indicator alone. As you know, if you have seen some of my prior videos, I collect a lot of information. I collect from market cap to flow to the pre-market volume, the gap up, and many, many more. If you can see how I have a lot of columns that are hidden, that's because I collect way too much information, probably more than I need. However, once you have this information, it's a lot. What I usually like to do is sort them by cap first, then divide them by cap first, and then divide them by deviation and slope. Because once you combine, if you have seen other videos where instead of sorting them by slope and then deviation, if you sort them by cap first and then by slope and deviation, you're going to notice that you're going to have even more precise data with a better probability, because now you're not only measuring slope and deviation, but you're also taking market cap into account. So yeah, so I collected all of this for 2023. Right now we're in the middle of 2024, but I thought it was very interesting. I haven't used this one much in my trading, but I think it's a great tool to have to improve your probability, improve your chances of being successful, regardless if you want to go long or if you want to go short. I think it's a great tool. Okay, guys, let me know if you have any thoughts, questions, comments, or any advice that you guys have for me, so I can share it with the rest of us. Okay, guys, but I think this is great. I think this is an amazing observation. Okay, so yeah, don't forget to subscribe. Please leave me a like, and I'll see you guys in the next video. Thank you.